This is me in hell, working for $9 an hour in a place that I really hate. Something that most of you still deal with every single day. You're waking up daily to go and slave away in a place that you know you hate. So depressing. But you know what was not depressing? When the results started to kick in from trading. I started getting $50 days, $200 days, and I really started to question myself. Do I really need to work in this place that I hate when I can make the same money, even more, with little to no effort and sometimes in my sleep? So I quit. This is me now, free, averaging around $500 a day from trading. And I can finally focus on the things that I actually enjoy to do, such as going into the gym consistently and focusing on self-improvement, all thanks to trading. And fun fact, it has been almost exactly 1 year since I quit the 9 to 5, and I haven't looked back ever since. However, I understood that unfortunately not everybody in this world is living freely, and most don't even realize that it's actually easy to start trading full-time in 2025. So I decided that I want to start helping more people to start trading full-time. So in this video, I'll show you everything that you need to go towards your goals fast using day trading. And trust me, the best part is anyone can do it anywhere using your phone and Wi-Fi. Now, before I show you how to make money, first I'll have to tell you what is day trading. So day trading is a fast-paced form of investing where individuals buy and sell securities within the same day. Basically, the goal is to profit from short-term price movements within the day. There's a lot of markets that you can trade in, such as crypto, forex, stock indices, a lot of different markets. And I'll explain you exactly what should you trade, and I will obviously reveal the secret strategy that turned me and hundreds of others profitable in these markets. And now I'll show you exactly how you can make a ton of money in these markets. Alright, let's get into lesson number 2, where we're gonna talk about charting and software. So today I'm gonna talk about the 2 foundational softwares where basically you can get started day trading even today using only these 2. The first thing is going to be TradingView, and the second one is going to be a brokerage or a prop firm account, which is need a means to basically buy and sell. But don't worry, you don't need to know that right now. I'm gonna explain more about it at the end of this video. But now let's hop on to TradingView. Alright, so basically what you're gonna do, you're gonna go on Google, you're gonna type in TradingView. This is the place where all the magic happens basically. Alright, so the beauty about TradingView is that this is the hotspot for every freaking pair. You can find everything. So there's stocks, funds, futures, forex, crypto, indices, bonds, economy, options. There's everything that you need. And what you can trade, what most of people trade is, is usually forex, futures, stock indices, etc. Me personally, I trade the S&P 500, so which is basically the ES, or you can also choose the S&P 500 CFD versions. That's what I trade. Okay, but you can choose whatever you want. Forex, everything's good. Okay, everything is amazing. But first, I'm gonna talk about the basics. So this may look like rocket science right here. This is like basically all the candles in here, and this is something called Japanese candles. So what we're gonna do is we're gonna use raw charts. We're not going to use indicators. If you don't know what is indicators, they're basically like add-ons to your chart, and some people use so many indicators, it makes everything look messy. The reason why I don't use indicators is for the simple fact that they lag actually. They're not actually exactly real time compared to these Japanese candles, what I use. Okay, so we're going to go in here, you're going to check these candles. Okay, you're going to use that. Here on the left, you can see the time frames. And I'm currently in a 50-minute time frame. That means that every 50 minutes a new candle will open and the previous one will close. So basically all these left ones are basically 50-minute candles that have already been closed, and we can use these candles as our advantage to make a lot of money. And this right here is the current candle that is moving, and in 40 minutes in this one, this will close and create a new candle. Now when you open your TradingView for the first time, it's gonna show like green candles and red candles. So basically your red candle is my black candle, and your green candle, which is the up candle, is my blue candle. And the reason why my candles are different than yours is because I customize these. Okay, basically you can just customize these in the settings, etc, etc, but it really doesn't matter. You can use green candles, purple candles, whatever, at least as you know which one is the down candle and which one is the up candle. That's the most important. This current pair that I'm looking at, S&P 500, the markets of this is open 24/5 times of the week. The only instruments that are open 24/7, which means all day, all night, is crypto
crypto pairs, and all of these are open 24/7, but all of these forex, etc., the things that I use, they're open 24/5. But let's talk about these candles. So up candle, blue candle for me, which is probably green candle for you. It opens from the bottom, and this is where it actually opened, and this wick, this mini part of the candle, is where it was, and this is where it closed. So blue candles basically open at the bottom and close at the top, and this is exactly what happened. And then there's this black candle, which is the down candle, red candle for you. It opened at the top. It used to be here because this is the wick of the candle. This is where the candle used to be moving, and the candle also used to be here, but it actually closed and finished in here. And as you can see, this is the second black candle, opens at the top, close at the bottom, and then there's the blue candle, opens at the bottom, closes at the top. That's how it goes. This is our simple and standard way to know where's the price actually moving. And as you can see, this is the candle that is currently moving, and once it closes, then we know the history about it. But keep in mind, all of these candles in the left, they used to be moving. They used to be actual moving candles. But now you may wonder like, what actually moves these markets? Who actually does all the moving? Basically, the market consists of retail traders, which we are. We don't completely move the market, but then there's also those kind of big whales who actually move the market, who have so much capital that we can actually see it in the charts, such as banks, institutions, and hedge funds. Now, what we day traders do basically is we look at the charts, we can easily indicate and know, are we going to buy today or sell today based on the strategy, and we basically just increase the odds by all means. And I'm going to teach you the exact strategy that turned me profitable. Something that we need to understand first is when we look at the charts, it doesn't seem like much, right? All that we're seeing right here is a visual representation of human mass psychology. That's why us day traders, we need to enter the markets when the pressure is at the highest. That's what I exactly meant when we need to enter when we have the biggest odds. And in the strategy that I'm about to tell you really soon, you're gonna learn exactly how to enter and when is the pressure the highest. So as traders, we need to understand how does the market move, and we can know that exactly by using market structure. So basically, the price always moves in a trend, and there's three kinds of trends how the price always moves. And first of all, there's the uptrend. Uptrend always moves in higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, pretty simple. It's very consistent and moves like this. It moves up a lot and down a little bit and then up a lot. That's how it goes. That's gradual movement. And then in a downtrend, the price always moves in lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And as you can see, it moves a lot down, moves a little bit up, down, a little bit up, and a lot down. That's how it goes. That's how the trend moves. However, you may wonder, what about the third kind of way the trend can move? Well, there's something called consolidation, which is basically sideways movement. This is exactly when the markets and the price doesn't know exactly what to do. There's equal amount of buyers and sellers, or the volume of the price is down. Now, when you're looking for a trade and you see consistent sideways movements, consolidation, that is the time when you shouldn't necessarily look for a trade, because one thing about all of these trends is they move consistently and they won't stop until something happens, such as liquidity sweeps or just volume entry to markets. I'm gonna explain you exactly what those are in a minute. Now, what we need to understand is when the price is in an uptrend or in a downtrend, we need to follow it. If it's in an uptrend, we're gonna look for buys. If it's in a downtrend, we're gonna look for shorts. If it's moving sideways, we're gonna wait a little bit. Why do we need to follow the trend always? Because like I told you, the trends will continue until something happens. So trend is our friend, we need to follow it. We also need to understand that everything in these markets happen for a reason. We see consolidation, we need to look at it with the bright side, because consolidation happens for a reason. Consolidate builds liquidity, and we can use liquidity as our advantage to look for trades. So I'm going to show you exactly what is liquidity. Liquidity is actually resting buy and sell orders that these banks, institutions, and hedge funds are trying to seek for. We can basically know when are these banks, institutions, and hedge funds are going to react to that and move the market by spotting liquidity. And liquidity always rests above highs and lows. I'm going to explain you exactly what those are in a minute in the charts, but keep in mind the trend always moves the same. Look at this: low lows, low highs, low lows, low highs, lower lows. Okay, this right here sweeps liquidity from the past. Boom, switches direction. Okay, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Switch liquidity from the past. This is buy side liquidity and this is sell side liquidity. Sweep. And what happens when liquidity gets swept, especially if it's higher time frame liquidity? Well, this is the buy side liquidity. Sweep, tapped into it. There's most likely going to be a change of the volume in the markets and a switch of direction, so it will start to go down until it takes some liquidity, or there's new volume coming into the markets with news or something like that. That's when it switches direction. By using liquidity, we can know when will the switch happen. Now in the charts, this is the 50-minute time frame. Look at this. How does the trend move again? Lower low, lower high, lower low, clear downtrend. What happens? Lower high. What happens here? consolidation, move sideways. Okay, that's cool. But what happens here? Why is it all of a sudden going up? You may wonder. Well, look at this. What is this? Liquidity. Sweep of liquidity, and then after the sweep we can see a clear reaction to the upside, and that is one clear indication of a trend switch. The reaction we can literally see, quite frankly, going up almost immediately after tapping into the liquidity. I want you to look at this. Also took out this liquidity right here, boom, and switch of the trend. And that's what we traders want to do. We want to enter when we see the actual switch of the trend and then follow the trend. Now this is a higher high. Now what is this? What is this? Higher high, higher low. What is mostly going to happen? Higher high, higher low, higher high. Now I understand this may look like rocket science, and you may wonder what the hell is this Adriel guy doing or showing me in these charts. You have to understand this is a beginner guide for people who want to start trading full time. But don't worry, you're gonna actually learn the strategy by the end of this video, because I'll give you a free gift and you're gonna turn profitable, I guarantee you. And trust me, this strategy is very, very easy to understand. This was just a sneak peek, but let's say I were to enter right here above this higher high and enter around here. This right here is the size of 1-to-1 risk-reward ratio. If you don't know what is risk-reward ratio, it is basically your risk compared to your profit. As you can see, this is the stop loss or stop limit, and this is the take profit where you get paid. So let's say I were to risk $10 in this trade. If I would lose, I would lose $10. If I would win, I would win $10. That's the risk-reward ratio basically in 1-to-1. Now you have to understand 1-to-1 is very, very small risk-reward ratio. You have to understand you're gonna risk the same amount that you could possibly make, not the greatest. I recommend 1-to-2 risk-reward ratio because that is exactly when you basically double the profit compared to risk in size. So let's say if you risk $10, you lose $10. If you win $20. That's 2x. And obviously the bigger the take profit, the more you're gonna make at the end. So let's say it's 1-to-3 risk-reward ratio. As you can see, it's 3x bigger than the risk. Always remember that risk-reward ratio is very, very essential for profitable trading. That allows me to have a very, very good win rate and a very good result of profit per trade. So this is risk-reward ratio win rate cheat sheet. This basically shows what kind of win rate and risk-reward ratio you need to have to be profitable in day trading. So on the left, you can literally see this is the risk-reward ratio, 1-to-1, 1-to-2, 1-to-3, 1-to-4, 1-to-5. And at the top, this is the win rate. So 20, 30, 40, 50, 60% win rate. Now this right here is 1-to-1 risk-reward ratio. This is where you risk the same amount that you could possibly make in a single trade. As you can see, with a 1-to-1 risk-reward ratio, you need to have a very, very good win rate above 60%. When you're at 60% win rate, that's when you're finally profitable at trading. But as day traders, we know some people do not like this style of trading because you need to be almost every time correct. Now look at this 1-to-2 risk-reward ratio. You could be losing 60% of your trades and still be profitable. As you can see, 40% win rate, profitable at 1-to-2 risk-reward ratio. Obviously, this is like the bare minimum, but you're still profitable. 1-to-3 risk-reward ratio. You're profitable at 30% win rate. That is amazing. You could be losing 7% of your trades and still be profitable at the end of the week, end of the month, end of the year. Look at this 1-to-4. You could be losing 80% of your trades, 80% of your trades, and be at break even. This is where you basically do not make money and you do not lose money. So think about it, with 20% you're at break even already, and 1-to-5 is crazy. This is when you're profitable at 20% win rate and you could be losing 80% of your trades and still be profitable. Obviously keep in mind, you need to find a sweet spot for you. What kind of risk-reward ratio do you want to have? Me personally, my sweet spot is around 1-to-2 risk-reward ratio because that allows me to have a very good win rate and obviously make a lot of money. Because let's use our logic, the bigger risk-reward ratio you have, the bigger chance you have of not winning the trade. That's just the simple logic. So in this case, 1-to-3 risk-reward ratio, I would make 3x compared to the risk. Now that we got the strategy out of the way, risk-reward ratio out of the way, you may wonder, well, how can I execute my trades and make actual money? Well, that's when brokers, exchanges, and obviously prop firms come in play. So I'm gonna go ahead and talk about those. Now, if you want to trade Forex, foreign exchange, then you gotta trade CFD regulated brokers. Now, these are just examples. These are very trusted brokers, CFD regulated brokers in here. And this is not a paid promotion or anything. I would not promote any broker, but these are very trusted ones. You can choose from here if you want to trade Forex, and obviously these are very good for beginners. Now, if you want to trade futures, which I understand a lot of people do want to trade futures, then there's a lot of brokers for those kind of traders as well. Understand what broker is suitable for your country, where you live in, and please pay close attention to the details of the broker. Now I'm going to talk about prop firms. Prop firms are not brokers, but they're firms that allow you to make a lot of money with little to none money. Now I'm going to give you a quick story of mine related to prop firms. When I started to see some really good profitability in my trading, I was so motivated, I was so hyped. That's when exactly I looked for a job and I started to flip burgers for $9 an hour, like I told you in the beginning of this video. That was for a good reason, because obviously I didn't have to be there, but I didn't want to ask money from my parents. So I started to work hard and flip burgers. And what I basically did with the money that I got from the 9-to-5 job, I started to literally buy prop firms. First of all, obviously, I failed a bunch of the challenges. Then I started to pass them. I started to make some really good money, actually really good money from the prop firms. Then I deposited everything into a live account, and nowadays I trade with the live account with real money in a regulated broker. Obviously, I quit the 9-to-5 job a long time ago, literally 1 year ago, and that's just a bit of locking in, staying focused. And that is actually a very good strategy that I used. You literally just buy prop firms, pass them, make a lot of money, and move them to a live account and trade independently. Now I'm going to show you how you can start making at least $300 a day from trading as a complete beginner. Okay, but this is an actionable step that I want you to follow. So for the next 30 days, stop trading with real money and start trading with demo or paper trading account, which is like fake money or virtual cash. The reason why I want you to do that is so you can get used to the markets and practice with the trading strategy, because obviously you want to be ready before risking any kind of money. But now I'm going to show you exactly how do these prop firms work, and then I'm going to show you the magic, okay, how you can start making $300 a day as a complete beginner. So about these prop firms, I'm going to show you probably the most trusted prop firm so far, FTMO. This is not a sponsorship or anything. They didn't pay me to say this. This is like the OG one, OG prop firm, etc. Obviously, this is for the Forex traders, FTMO. But if you trade futures or something else, then there's obviously prop firms for those kind of traders as well. But pretty much all of these prop firms work the same way. So basically, you have to pay like a small fee. Let's say in this case, $10,000 is the smallest account, $10,000 fake money. I know it's fake money, but you need to first pass 2 steps, and then you can actually start to earn some real good money. So these prop firms basically have rules. For example, profit target, you have to make at least $1,000. Basically at the end of the first step, you have to have 11K, then you pass. Second stage, same thing, but you have to make 500, so 5%, etc, etc. And step number 3, you actually get money. Whatever you make, you'll actually get the money, and once you get the payout, it's in your bank, bro. Like I told you, you can choose whatever prop firms you want to choose, but only choose the most trusted one, okay? I'm gonna say this because this is the one that I trust the most. But obviously, like I told you, nowadays I trade with real money, but I first trade with prop firms to get the good money. Then you can choose what the fuck you want to do with the money. So if you want to make $300 a day, then this $10,000 is perfectly fine for you. So let's say now you decide to buy the funded account, let's say the $10,000 account, okay? It costs you $90 around, something like that. And you're going to risk 1% per trade. Think about it, 1% per trade, 1 to 3 risk-reward ratio. Because if you risk 1% a trade with the $10,000 prop firm account, it is basically $100. And when you win, in the 1 to 3 ratio, it is $300. That's how it goes. That's how you make $300.
And now your only job is to take action. Choose a trading pair that suits your daily schedule. And all I gotta say, best of luck to your trading. If you want to become profitable super fast, then I have a gift for you because you made it to the end. So first link in the description, get access to the free community, free trading course, and get a kickstart to your trading career. Okay, man, as usual, I'll see you on the other side. Peace out.